Hello everybody, welcome to the technical analysis webinar with AvaTrade. This is Troy, I'll be presenting this evening. Before we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, great. Looks like I've got enough responses here. Everybody must be up and running fine. If anyone has any issues as we go along, please feel free to let me know. As always, keep in mind as we get started that no one trade is guaranteed to profit. There's risk with each and every trade that you take. With that said, also keep in mind there's a good potential for profits as well with each and every trade that you take. Hopefully what we cover here will help you in that regard in terms of learning some ideas and some concepts that will hopefully improve upon your P&L. No promises though. Now, as we go over the information, keep in mind that it's from an educational perspective and not to be taken as financial advisement. As long as we're talking about risk, one thing to keep in mind is that we have on our award-winning mobile app, AvaTrade Go, a special feature called AvaProtect, which you can protect against any and all losses for defined time periods for a small premium cost. And so that's available on certain instruments, gold, silver, FX pairings. You'll see as you use the AvaTrade Go mobile app which ones have the AvaProtect feature available. It's a unique way to manage risk as part of your risk management plan. So along with using stop losses or hedge positions, you could maybe think about working into your strategies the use of AvaProtect. That feature is also available if you use our web trader platform, which also trades on your MT4 and MT5 accounts, just like AvaTrade Go. So both platforms offer that feature as well as some other nice risk management features that maybe we'll take a quick look at. Now, as we get going, in general, what is technical analysis? It's looking at the historical movements on the charts, usually candlestick charts, trying to find patterns, predictable movements that lend, hopefully, to future movements some predictability. There's no guarantee that future movements will be predictable based on past movements, but certainly there is some benefit in looking back at the charts, doing what we call technical analysis, looking for price levels that look important, support levels, resistance levels, trend lines, etc., and maybe finding advantageous spots for getting into and out of trades based on that technical analysis. And many times it can be beneficial for predicting movements within your strategies. And so, again, nothing works 100% of the time, but if you can improve upon your win percentage just by a little bit, a small percent improvement in win percentage really can make a huge difference in P&L at the end of the day, the end of the week, etc. Now, you can use indicators as part of your technical analysis, but I think it's important for you to understand the manual methods behind what the indicators are looking at. You know, if you're using an RSI or a stochastic indicator or Bollinger Bands, really what those indicators are doing is looking back at a certain number of candles, looking at the patterns and the movements, and then trying to predict what will happen moving forward. The same as what we go through in the webinars from a manual perspective, so that you can understand actually what were the programmers of those indicators thinking. And so, and what you'll find is that when you're doing technical analysis manually, you actually can be smarter than the indicators because you can take into account what's the fundamental situation that's occurring, which way's the wind blowing, so to speak, fundamentally, as you're doing your technical analysis, and maybe you prefer certain price levels over others that an indicator couldn't be selective about. And so, not that we don't use indicators, sometimes we'll put an indicator or two onto the charts, but typically we're leaning on manual methods in the webinars because that's how you learn about price levels and technical analysis rather than relying on an indicator to do that work for you. Okay, so as we go along, if you have any questions or you want to give any input, please do so. I'm happy to share ideas and also to answer questions. So I did mention, even though this is a technical analysis webinar, that it's important to understand which way is the wind blowing fundamentally. And so let's do that real quick. I'll show you how easy it is to get a feel for what's happening fundamentally in terms of the sentiment. We can see this headline, bank tech stocks propel S&P 500 to new highs. That sounds positive, right? Okay. New highs on the S&P 500. Bank stocks, tech stocks doing well. We look at the US futures, they've been green all day. We look at the US market, it opened green. Okay. There is a little bit of volatility in the air. You see the VIX volatility index is up. Usually the volatility index is down when the markets are green. Usually if the S&P, the Dow Jones, the NASDAQ, the futures, all of this is green, usually we see the VIX index is red, meaning volatility is down. But in this case, the markets are up, but also so is volatility. So something has to give because that's in conflict. That's not usually the case. The majority of the time, if we see the stocks are in the green, then usually the volatility is down, okay, or vice versa. But what we see here is the indices are up, stocks are up, but so is fear, so is volatility. So something strange is in the air a little bit fundamentally. And so we could try and take advantage of that with our technical analysis. We could expect maybe some large movements when that sort of situation is occurring. Also, the dollar index is up. Usually when the markets are rising, the US dollar is not strengthening. Usually it's letting off some of its strength as the markets rise. The US dollar tends to strengthen when there's fear. When the markets are selling off a bit, people are buying back in as they sell their stock, they're buying back into the US dollar somewhat. And so it's interesting to see that the stocks are in green, but so is the volatility index and the US dollar. And if we look at the stocks, they're not so far in green, are they? Just slightly up. And so, far less than even a 1% gain, right? Not even a 1/4% gain. So the volatility is up much more than the indices, percentage-wise, almost 2% up on the volatility. So this is something to kind of look for. Maybe we expect some pullbacks if they haven't occurred already, okay? And sometimes gold and some other instruments tend to drop when the US dollar is strong. Okay, and we see the US dollar strengthening today. So we'll keep that in mind as we look at the charts with our technical analysis. Now, crude oil higher. Demand optimism outweighs COVID fears. Okay, another positive headline. Okay, high demand for oil. Why? Because a lot of the major economies around the world are coming out of their lockdowns. They're coming out of the COVID pandemic lockdowns, and economies are opening up and starting to actually do quite well. So there's demand optimism outweighing COVID fears. It makes sense until the next outbreak, right? No, hopefully it doesn't occur. Hopefully this Indian strain of the virus can get under control. Okay, Andreas, I think that was on your side. If something froze up, I think everything's okay. All right, so another headline, U.S. home prices rose in April at fastest pace in 15 years. We're seeing a theme here, right? All the headlines are positive. High demand for oil, right? S&P lifted on, tech stocks and banks. Positive headline. Crude oil up. Positive headline. U.S. home prices rose in April, fastest in 15 years. Another positive headline. Like, wow, how good is the economy doing? House prices in the U.S. rose fastest pace in 15 years. What do you start to think of, though, when you see prices rising so fast? What type of fears creep in when you see house prices rise to a 15-year high so quickly? What's that called when prices rise maybe too fast? Hyper inflation, right? That's what's referred to as hyperinflation, when prices rise faster than you would typically expect, right? And no wonder house prices rose, right? Zero or near zero interest rates. So very low interest rates on home loans from banks, combined with lots of economic support from governments around the world, including the U.S. government, with large checks handed out and stimulus payments to U.S. citizens in the trillions of dollars worth. Extended and larger unemployment benefits for long periods of time. Many people were getting more money than they made at their jobs with their unemployment checks, plus the stimulus checks they were getting. So people got to a point where maybe they were buying houses much faster than they normally would have, even during this pandemic, and up went the prices, right, to a 15-year high in terms of the rate of price increase. The rate of price increase, 15-year high. So some of those inflation fears could creep back in. Ruben, you're the first to have typed it, inflation, and really inflation isn't necessarily bad. I mean, if you don't have enough inflation, that's bad. But if you have too much inflation, that's also bad. You want the right amount of inflation. And too much stimulus can lead to hyperinflation. And so now the fears from the stock market are starting to creep in that, wow, the US government might start to cut back on their bond buying program. They might start to cut back on these stimulus measures. Maybe they're going to raise interest rates to try and slow down the inflation, do the opposite of what they did to cause the inflation. All the support they gave to the economy, low interest rates, etc., bond buying program helped keep the economy up, but now maybe it's up too fast, too far. And so the fears have been the past couple of weeks that maybe the U.S. government's going to taper off, they call it tapering, the bond buying program, and maybe raise the interest rates sooner than expected, etc., to try and slow the inflation down. And so then you could see a sell-off on the stock market, the opposite. Even though everything seems to be doing so well, fear could hit in a second. And that's what we see today. The stock market's up, but so is fear. So is volatility. So it's kind of a weird mix because it's really good economic news, which usually causes the markets to rise, but it's also everyone saying, well, wait, if the news is too good, maybe that means a cutback in bond buying program and a sooner interest rate increase. And so then there's this kind of seesaw battle back and forth between happy about good economic news, but then, okay, wait, then that means maybe stimulus will be cut back. Another positive headline, U.S. consumer confidence near 1.5-year high. So people are spending money. Prices are rising faster than was expected. Jobs are doing really well, etc. Oil prices are rising. High demand in the economy for things. At some point, governments are going to have to say enough stimulus, right? And that could be the impetus for a sell-off in the markets. Okay, so on our main website, I mentioned our mobile app. You can find it here, trading platforms, AvaTrade Go. It will trade on your MT4 account, your MT5 account. You'll see the same trades from your MT5 platform, MT4 platform. If you log in through the mobile app, it's the same trades. You can manage them in all of the locations. And what's nice is if you use the mobile app, you have the ability to put Ava Protect on the trades. Also in the order window, you'll notice if you put the take profit and stop loss, it calculates your exposure and your potential profit for you, converted to your account currency. So before you buy or sell, not only can you protect trades in a special way, but also it will tell you what you're risking when you set your stop loss based on your trade size and the distance to your stop loss. It calculates it for you. Same with your potential profit. So it's a trade calculator built into the order window, which the MT4, MT5 platforms are older. They don't do that for you. So it's a very user-friendly mobile app, and our web trader, which you get to by logging in from here on the main website. Just log in from the website login, and you'll be in the web trader. It has those same functions. Calculates your exposures for you, has Ava Protect, all these extra features. Okay, and if you log in from here, the web trader looks like this. Okay, and by the way, you don't even really need the AvaTrade Go app. If you log in with your mobile, you can use your mobile on the web trader. It acts as a mobile platform as well, just by logging in from the website into the web trader. But AvaTrade Go is also very nice to utilize. You can use either or both. Okay, so what we should do, let's jump on the MT4 platform here. We used the web trader in the last webinar, so let's use the MT4 platform this time. And let's take a look. I'm on the daily candles for Euro USD, and we see what happened today to the Euro against the USD. It dropped, right? We see a red candle. That's Euro USD, red candle. Why did the Euro drop? Well, the USD obviously strengthened. There's some fear on the market, so that tends to strengthen the US dollar. Even with all the good news economically, we understand why that actually might create fear, because too good of news, too much inflation could lead to a cutback in stimulus. Okay, so although the US is quickly readying or trying to ready an infrastructure stimulus deal to add to the trillions and trillions of stimulus that's already been handed out, so what do we look at if we go to, say, 1 hour candles on the Euro USD? Well, we see that there's a support level down here that it already bounced off of, okay? We see, if we look back to the 22nd here, 22nd, 23rd, we see this is a support level. The Euro USD bounced up off that price, okay? It also bounced here. Once it broke above that price, it became support, support, and then stayed above until it dropped. And look how predictably, when it hit this same price, it bounced right back up, okay? And then it pulled back down a bit here. So we're near this support level that held today once already, and we've got a long distance to the resistance way up here, okay? This resistance is up around 119.75, and currently we're at 118.96. So I see an easy move here if there are inflation fears. If there are fears of inflation, and the U.S. is readying an infrastructure deal, which could add to the fears of inflation on the U.S. dollar in particular, we understand there was some fear. The U.S. dollar strengthened. We see a support level here for our technical analysis. This could be an easy move, technically speaking, to just say, okay, let me pick a trade size that makes sense for my account. Let's say a quarter of a lot, whatever size makes sense for you. And we buy. Okay, where do I put my stop loss? Makes sense to be below the support level that's held for the past week or so. So I put my stop loss here. If it breaks this support level that it already bounced off today, that it held off of back here last week twice, if it breaks through that price level, then it probably makes sense maybe to give up on your buy position, right? If it breaks the support, that means the USD is continuing to strengthen, and maybe you just admit that maybe you were wrong, right? Hopefully that's not the case, right? And we say support level hopefully holds, and we put our take profit up somewhere near a resistance level. Depending how quick you want to take profit, you could go to the first resistance level here. You could go to the high that it hit last week, okay? Maybe up here. So we're looking at potential profit about 4 times what I'm risking, right? And technically, it's a solid move because I've got a nice support level here that hasn't been broken for a week or more. It's been confirmed as a support level here already today. It hit and bounced. I've got a pullback to get closer to the support that occurred the last couple hours. So technically, that's a nice entry point with your stop loss below the support level. Fundamentally, you can think about, does it also make sense? And if you understand that there are some fears about inflation, especially with home prices rising at a 15-year rate, the fastest in 15 years in the US, maybe some inflation fears will kick back in. If that's the case, then maybe the fundamentals help the euro to climb against the USD as well, not just the technical entry point. Okay, so with this move, you're banking on maybe we get a rise up towards this resistance level from last week. If not, we're not risking much. It's a limited risk, high reward type of situation. Just take a trade size that makes sense for your account. With this type of setup, you probably should be able to be right at least 50% of the time, right? And if so, you're profiting great because the potential profit is much larger than the risk. Even if you're only right 35% of the time with this type of setup, you're going to profit, right? Because the payout is 3 or 4 times the risk. So technically it makes sense. Fundamentally, it kind of makes sense. And then that's what trading's about, right? You go after the potential profit when the technicals and the fundamentals try to line up. All right, so we can look at the US Tech 100. Of the major indices, it's rising the fastest. Why? Because it's driven by tech stocks largely. And the tech stocks, as we saw in the headline, are doing very well right now. So the question is, how long can this last? How long can these indices keep reaching new highs before there's some kind of sell-off? I'm looking at one-day candles, and look at this bull run. I mean, this is what they call a bull run. Look at these one-day candles. We just keep reaching new highs week after week after week. At some point, there could be a large pullback, right? The question is, when might that occur? And, you know, many times it's a folly trying to guess the high point, right? Trying to guess the high point, selling in an uptrend. And I don't usually propose that you would do that. Now, one thing you could do is start to draw lines to say, okay, here's what should be a support level, right? It's resistance, resistance, resistance. Now it broke above that price level. If the movement breaks back below that price level, right? If it breaks what should be support now, if this movement breaks back below that support level now, then that establishes a downtrend, right? And then maybe you have a reason to say, now maybe I could short, in this case, the NASDAQ, the US Tech 100, the NASDAQ 100. So a good way to handle wanting to sell on something from a high point, but also not wanting to sell during an uptrend is to say, okay, I understand there's fear on the market today and things are a little backwards because the volatility index is up, the fear index is up, but so is the NASDAQ. So, you know, which one is right? Is there really fear on the market? If so, then shouldn't the NASDAQ sell off? You don't have to try and guess. What you can do is say, if a downtrend starts, if this breaks this support level, then I'll sell, right? So what kind of pending order could we put down here that if it breaks below a certain point to confirm a downtrend, then you want to sell? If that's your strategy, what kind of pending order could we place down here to sell if the downtrend kicks in? Aaron, you can place trades directly from the MT4, MT5 platforms. You can put what's called one-touch trading. You can activate that. So it's very simple to do. Good, exactly. Yeah, sell stop. Some of you are typing that already. A sell stop is a way to try and ensure that you're only going to sell if the uptrend ended, right? You want to sell from high point, right? Makes sense. You know, buy low, sell high. That's the general idea of what everyone wants to do. But you don't want to sell high if it's a strong uptrend because it might just keep climbing, right? So the idea of a sell stop is not that you want to sell from a lower point, but that you're willing to sell from a lower point just enough that it confirms a downtrend, that maybe it breaks a support level that you deem important. And now you say, okay, now I'll sell. So that's the idea of a sell stop potentially here, to say, okay, I don't want to sell yet because it's a strong uptrend, but I do think there's fear on the markets. We saw that with our little synopsis of the fundamentals as we got started, that there is fear on the market, that things are a little backwards right now with the stocks rising during an increased fear situation. So a sell stop sells from a lower point. And so I could say if the price drops to 14, let's say 14,470, and we could adjust that once we get it set. 14,470. And I could put my stop loss back above that price level up here, back above the all-time high, 14,560 for a stop loss. You can't get a better stop loss than that above an all-time high. If it breaks above that, then certainly you were wrong by selling, right? If it reaches another all-time high, that's probably a good spot to get out on your sell, at least in the short term. And take profit, we could be looking at the first major support level maybe down here, 14,335. Or further, depending how patient you are, if you're scalping the market or trying to get in and out quick. So we've got our pending order. We say, okay, if this comes down, breaks the support level, maybe I slide this down just a hair further, right about there. Now I'm clear of this whole support area. If it hits this price down here, we've started a downtrend for sure. Okay, doesn't mean the downtrend will continue for sure, but certainly we've started a downtrend. If the price drops below this support level and below this support level and hits our entry price, we're in a downtrend. Okay, certainly something flipped if that happens. Now, if we look, we say, okay, let me slide my stop loss back up because I cheated my entry point down a bit. Now I look and I say, okay, if I enter here, I'm risking this distance to make this distance, which still I have a little bit better potential profit than what I'm risking. Not as good as the other setup where we had like 3 times the potential profit, but still I've got a little better potential profit than what I'm risking. And it would have to go, if it does hit this price, it would have to bounce above the all-time high for it to hit my stop loss. And if it drops, it doesn't even have to break this support level to hit my take profit. Okay, it doesn't even have to break the support to hit my take profit, just has to try and bounce on it. Okay, so the technical analysis would be on your side here, meaning it's an established downtrend if it hits this price. In order for you to lose, it would have to break back above this resistance and the all-time high in order for you to lose. And in order for you to win, it doesn't have to break any support levels, just has to reach the next one. Okay, so this is a nice setup, technically speaking, getting in only if it breaks a couple support levels, establishing downward momentum, but it also makes sense fundamentally because there's some fear on the market right now. We saw that in the volatility index. Some confusion on the market where volatility's up, but so is the stock market. So something has to give. Eventually, something's going to have a strong move. Either the volatility is going to drop or the NASDAQ very well might drop, one or the other. And the same would hold true, for some of these other instruments. And some of them already dropped, by the way. If we look at the FTSE, look, it's down. Maybe that's an indicator as to what the NASDAQ might do at some point here, because the FTSE is literally straight down the last 4 hours, 5 hours. 1, 2, 3, 4, 5 hours dropping. So, the market is so global anymore that if you see some instruments dropping like that, and if the majority of them are, then likely the outlier will eventually drop. You see the CAC 40 also dropped. Going with that fear that we saw. The FTSE we saw drop, the CAC drop, the Nikkei kind of flat, US 500 trying to drop for the last several hours. So the outlier is the NASDAQ. And so maybe now is a time that it could pull back. And with that known, maybe you also do a market move. Maybe I say, you know what, I'll sell on market as well. Instead of just a pending order, I'll put my stop loss above the all-time high, just like the pending order. If it goes to an all-time high, I'm out. If it drops to the first support level, I take my profit. I have about double potential profit to risk. So selling with what you know now, the many of the indices have already dropped, maybe giving indication that that fear has taken over a bit, and maybe the Nasdaq follows. If not, you're risking only a small amount to get above the all-time high to your stop loss. And then you take your profit at the support level. That technically, that's a good strategy in terms of you might get a bounce off that support. So you could take your profit as it reaches that first support level. If it breaks that support level, you're in on another sell. So going with the market, getting back in with a pending order if the support breaks. Okay, so both of these things make sense fundamentally and also technically. Okay, it's really nice to get your stop loss above an all-time high, right? Without having to risk much at all, with the fundamentals on your side. So doesn't happen very often, by the way, that type of setup, to have the fundamentals and the technicals line up so well. Okay, any questions at this point? Before we look maybe at, I think crude oil is a good one to look at right now. Okay, if any questions pop up, I'll try to address them. Let's take a look at crude oil. And what we see is crude oil went flying up today. These are 1 hour candles. So this was today's rise. Why did crude oil go up today? Up, 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 up before pulling back. Crude oil went up because we saw the headline, right? The outlook for increased demand on oil as all these economies are coming out of the pandemic is outweighing the fear of COVID. And so up went oil today. Now it pulled back. So you could view this pullback as an opportunistic spot to buy, or flip. You could see that fear is taking over and maybe you want to sell, right? So when you start to look at too many variables, it can become confusing. I think the best method is to keep it simple. Okay, what do we know about demand for oil? It's up. Economies are opening up. So if that's the case, then fundamentally it makes sense, buy on oil, right? Don't have to overthink it. Then we look at the technicals and we say, you know what? All I have to do is risk below this bounce right there. We see oil came down and bounced. Okay, if it breaks below this bounce point where it bounced back up, then okay. The fear is taken over, then I'll get out. Small risk. The potential profit just to today's high, based on the fact that I don't think anything changed about oil demand in the last several hours. This was just kind of a technical pullback. So if oil's going to climb, it certainly can reach today's high without any trouble, right? So I'm only risking about a third or a quarter of my potential profit. And I don't even have to break today's high. So technically speaking, this is a beautiful move. I don't have to risk much to get below this pullback price, very little risk. And my potential profit is about triple what I'm risking without having to break the high that oil already reached today. Okay, so you're always trying to find advantages, right? That's the idea of technical analysis. Looking for confirmation of movement, which we were talking about with that pending sell stop, right? That was a setup waiting for confirmation of movement, waiting for a breakthrough of a support level. And then the other idea of technical analysis is looking for an advantage, an opportunistic entry point. And so if you deem oil demand to be up and that oil should rise, and that doesn't come from us, right? That comes from that headline, right? Crude oil higher, demand optimism outweighs COVID fears. We see a slew of green on the markets. We see home prices rising. We see consumer confidence up. All of that tends to help drive up crude oil. Positive economic numbers, oil investors assume that means there's going to be increased energy demand. As people are spending more money, more products are being made and shipped, more demand for fuel. Okay, so with that understood, then the fundamentals are on your side to buy on oil right now. without confusing the issue about fear of inflation. Okay, and you understand inflation actually causes oil price to go up. So fears of inflation doesn't drive oil down. Fears of inflation might drive oil up, actually. Okay, and if the U.S. dollar is weakening. So fundamentally, this isn't a bad move to try and buy on crude oil. If you like the entry point and it makes sense to you, then you don't have to risk much to get below this little low point right here. And your potential profit, as we pointed out, is maybe 3 times. That doesn't mean you can't set up a sell stop below this line. If the downtrend continues and oil breaks below this low point, you can have a sell stop ready to go here to take profit maybe at the low point today here. So I have no problem buying at market and then at the same time preparing to be wrong, which happens, not going to be right every time, preparing to be wrong and preparing a sell stop at, let's say, 77 or 72.65 as an example of a sell stop backing up a market buy. There's no ego in trading. There shouldn't be. Should be willing to say, I know I could be wrong on this market move. I'm going to prepare in case there really is a lot of fear and oil is going to break this low point. I'm preparing a sell position with my stop loss then back up above that point, maybe 73 even. And my take profit down here just before today's low at 72 even. And so as we set this up, we say, whoops, I mixed something up here. At price 72.65, that's correct. Stop loss above that on a, oh, I had buy stop. That was my problem. I accidentally clicked buy stop instead of sell stop. That should work. Okay, there we go. So sell stop prepared in case it hits our stop loss on our buy. Then if it breaks that support level, we can get in on a sell. And I'm going to risk about half of my potential profit, even less than that, just to get to a profit to take before even today's low point. So it's a nice setup. If it breaks the support level, it makes sense to sell. As long as it's bouncing above the support, it makes sense to also go after a buy position. So if we're right on just one of these two moves, you profit. It's a profit. Okay, 50% here, and we profit. And maybe the sell never activates. You know, if we're right on the market buy, maybe the sell doesn't activate at all. That's okay too. Sure, we can take a look at gold. Let's do that. Okay, what you can look at on gold is, let me just simulate a market move. Okay, if I'm selling on gold, you might say, okay, why did you sell on gold? First of all, I would say technical analysis wise, this was a pretty major support level that broke earlier today. We see support, support. Look how many points of contact on this support. 1, 2, 3, 4, 5, 6, 7 times the price held right above this price level. And then today, what happened? Boom, it plunged. Something major hit gold prices today, and it was the US dollar strengthening. Whatever fear hit the market and caused the US dollar to strengthen, down went gold. And it very well could have been, and it happened around this time when the US data came out that home prices rose its fastest rate in 15 years, and that consumer confidence is up to a 2.5-year high, etc. All this good news came out, gold dropped. Why? Because there are fears that the US then will raise interest rates sooner and cut back on the bond buying program, which actually then eliminates inflation if that happens. So it's like a preemptive strike. You know, you buy gold if you think there's going to be inflation, and there has been, right? You sell gold if you think there's about to be the opposite of inflation. And so gold came shooting down because the news was too good, meaning gold investors said, wow, stimulus very well might be cut back soon, which then would strengthen the US dollar. And so speculative trading caused the US dollar to strengthen before any of that actually has happened. Before the bond buying program is cut back, before the interest rates are risen back up to slow inflation, people are assuming that maybe that will happen now. And so the US dollar got bought into and gold got sold off as a knee-jerk reaction to positive economic news. Okay? That's the timing of what happened today fundamentally. Now, technically, we look at it and we say, wow, that was a big support level that broke. And now we're below that support level. So if I'm selling on gold, I might say, okay, as long as it doesn't break back above this support level, I'll stay with my sell. And maybe I assume maybe it can reach today's low for a take profit. That's about an equal risk and reward. If I want a smaller risk and a larger reward, then I can say, you know what, I'll just put my stop loss above this pullback. It tried to climb, and that's as high as it got on the 1 hour candles right here. And now it looks like it's in a downtrend again. So the smaller risk move on this is just put it above the pullback that it bounced up to before it started dropping again. And so I only have to risk about half as much compared to putting my stop loss above this support level up here, this old support. So it depends how patient you are, right? Do I want about an equal risk reward, or would I rather scalp and say, as long as it doesn't go above the high that it pulled up to, I'll stay with it. If it breaks above that, I'm out. Small risk, much larger reward. Technically, maybe that's a nice setup there. Okay. You have your options, obviously, with direction and exactly where you'd put your take profit and your stop loss. But what we see here is a nice resistance level up here that was broken, establishing a large downtrend, and a low point that was reached that it looks like it might be trying to push back towards, obviously with no guarantee. If you open a trade like this on AvaTrade Go, our mobile app, or on the web trader, you can put Ava Protect on it. You can protect against any losses if it goes the wrong way and go after the profits for a small premium cost. So you could open the trades through the web trader or AvaTrade Go and take the same move with a different risk setup, risk protection setup, I should say. Okay, and I think one other instrument we could look at before we call it quits here, maybe some cryptocurrencies like Bitcoin. Boy, did Bitcoin come roaring back up today and really over the past week after a large drop. If we look at the 1 hour candles, we say, wow, look at that uptrend, right? And this is all about perspective with your technical analysis. We say, wow, that's a nice uptrend. Maybe I should buy. It's a strong uptrend. If you, instead of looking at 1 hour candles, look at 1 day candles, you say, wow, that's not an uptrend. That's a huge downtrend, right? Look at the drop off in price. So it's all about perspective. If you're looking at 1 hour candles, it looks like it's just been climbing forever. If you look at 1 day candles, you say, wow, the market really sold off. So we're actually in a pullback, a bounce up on cryptos today in a much larger downtrend. So you might view this as an opportunistic entry point to sell if you believe that this larger downtrend will continue. And the fundamentals behind what caused this big sell-off on Bitcoin and other cryptocurrencies on the 1 day candles, why did it drop so much? There are a couple things going on. One is China announced that they're really cracking down on cryptocurrencies, both with the banking system and also banning mining in certain areas. And China was a big miner of cryptocurrencies, and you might not know what that means even, but it's bad for the market in general, the crypto market, if folks are not able to mine new coins, create new coins. China and the rest of the world really are worried about the energy costs of mining, quote unquote, mining these coins. And so in order to create intrinsic value within the coins, the way that they're created is it takes a lot of energy to quote unquote mine a coin. To create a coin, it actually has a cost, an energy cost to create it. And so China doesn't like that idea of having this energy in their minds maybe wasted creating electronic coins. And this crackdown put some fear into the crypto market, and there was a big sell-off. And on top of that, now the UK is cracking down more and more on cryptocurrencies, and maybe that's going to spread to other countries. I know the US also is a bit nervous about that whole market, the crypto market. And so there's a lot of bearish pressure fundamentally on cryptocurrencies, which is nice trading on a platform like ours rather than buying and holding cryptocurrencies in a wallet where you only make money when it goes up. When you trade CFD style on our platform with cryptocurrencies, you can profit while it's dropping. You can sell if you think the fundamentals say sell. Now, I know some of you attending the webinar are in the UK, trading under a regulation that maybe doesn't allow cryptocurrencies. That's okay. All right, we're not here to say that the FCA or other regulators are wrong. They make their rules, we abide by them, right? If you're in an area where you can trade on cryptocurrencies, then maybe you look at these potential opportunities. And so when we look at the one-day candles, we see a large downtrend. We see a support level on the one-day candles here. And that's exactly where it bounced up from. You see these wicks, support, 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 tested it, went past it and bounced right back up, tested it again and bounced up. So this is a nice support level, but it's well above that support level now. The question is, do you think this could pull back? And after all of this climbing today, just technically speaking, seems possible we could have a pullback. If I look at the 4-hour candles, I see some resistance right here, okay? It's not like there's not a resistance level. Resistance, resistance, drop. Resistance here, same price level, drop. Resistance, drop. And now here we are at this resistance level. The market's trying to decide. So, you don't have to risk much, technically speaking here. You take a trade size that makes sense. Maybe you go smaller because cryptocurrency is a bit more volatile, right? Maybe I do 0.1 instead of 2.5 like I did on the other instruments, or whatever trade size makes sense for you. And you take a shot at saying, okay, maybe this resistance level holds. Maybe the bounce back in this overall bearish market on cryptocurrencies, maybe the bounce back up has slowed. I don't have to risk much to get above today's high compared to what my potential profit would be if the move drops, say, to the first or second support level. If I went down to the low this past week, I should say, not this week, but last week, within the past 7 days, within the past week, if it gets anywhere near this low, look at how large the potential profit is compared to the risk. Huge difference. And so I could even say, well, maybe at this support level or this support level, I take profit. More likely to get here than it is all the way down to here. And still I have about 3 or 4 times the potential profit compared to risk. And I only need it to come down to a pretty close support level right here. This is a price level that was acting as support before it went up the last few hours. So technically speaking, very advantageous entry point to go after a much larger potential profit than risk in really an overall bearish market when you look at the one-day candles. Natalie, you're saying China has plenty of electricity, probably for Bitcoin mining. You think they're secretly mining Bitcoin after they said they banned it? Listen, anything's possible. They tried to drive the price down, you think, maybe, in order to buy some coins if they're not mining it, maybe. I don't know. That's all speculation, but it's an interesting take that you have there. But in all signs right now, it looks like they're pretty serious about cracking down on the crypto mining and industry. But maybe you're right. Maybe there's some gaming going on there by China. Okay, but for now, we understand one-day candles, huge bearish market, and 1-hour candles, a large bounce up that maybe you could try to take advantage of, putting your stop above the recent high without having to risk much and a much larger potential profit to the first support level here. All right, so I think that's a good setup. What we've gone over so far in terms of the simulations, I would say I expect some large movements this week, and maybe even through the evening and night tonight. You could see some large pullbacks and bounces from the movements today. So you might get your pending orders in on some different instruments like we've simulated here, maybe some market moves as well, and go after those large potential profits. Just be careful to limit your risk in a way that makes sense for you. All right, everybody. Thank you for joining. We'll be back at it Thursday with another webinar a bit earlier in the day, afternoon time. And good luck between now and then. I hope you make some nice profits today and through the rest of the week this week. All right. Bye for now.